Welcome to the seventh part of the Money Series. We're nearing the end and right on the cusp of understanding how our government is failing the dollar. We've covered a lot, from the barter to commodity money to banknotes to the gold standard. In this episode, the Bretton Woods Agreement and how it put the U.S. in a position of power. As World War II was coming to an end, the leading Western powers, led by the U.S., met to develop the Bretton Woods Agreement. In 1944, more than 700 representatives from 44 nations traveled to the Mount Washington Hotel, a secluded resort in the mountains of Bretton Woods, New Hampshire. The intention is to come up with a new financial system for the global economy. With the global economy in recovery, they needed to regulate and promote international trade. The first thing they needed to do was decide how the currency was going to be pegged. Currency pegs are expected to provide currency stabilization for traded goods and services as well as financing. Since the U.S. at this point held most of the world's gold supply and the gold-backed dollar was relatively stable, the U.S. became the world's reserve currency. This meant other currencies could back their currencies with dollars rather than gold. The dollar to gold price was $35 an ounce. As you can see, the world continued to operate upon a gold standard, however, indirectly. In order to ensure compliance with the new rules, two international institutions were created: the International Monetary Fund, the IMF, to monitor exchange rates and identify nations that needed global monetary support, and the International Bank for Reconstruction and Development, known now as the World Bank, to manage funds to help countries that were hit and obviously damaged during World War II. This rule afforded the US dollar some privileges other countries could only dream of. The biggest benefit to us is the circulation we enjoyed. The world bought more and more of the dollar. We'll discuss this in length in the next video. However, by 1971, concerned that the U.S. gold supply was no longer adequate to cover the number of dollars in circulation, President Richard Nixon devalued the U.S. dollar relative to gold. After a run on the gold reserve, he declared a temporary suspension of the dollar's convertibility into gold. By 1973, the Bretton Woods system had collapsed. Countries were then free to choose any exchange arrangement for their currency except pegging its value to the price of gold. They could, for example, link its value to another country's currency or a basket of currencies, or simply let it float freely and allow market forces to determine its value relative to other countries' currencies. And this is the biggest failure of our financial system. In the next episode, we'll discuss what keeps the dollar as a reserve currency despite the removal of the Bretton Woods system.